Hi there, I'm Irked, and this is my channel Get Irked, where I teach you how to invest for the long term. In this video, I'm going to talk about investing for the future. You may be hearing a lot of different themes that we're going to see in the future, and wondering how can you invest in those themes. In this video, I'm going to talk about how to build a future-thinking portfolio using exchange-traded funds, or ETFs. I'm picking ETFs that focus on the Green New Deal, clean energy, and inflation hedging. As always, the information in this video is educational and informational entertainment purposes only. I'm not a professional advisor, so if you do find interest in any of these funds, you should consult with a professional to see about how they fit your portfolio. The reason why I use an exchange-traded fund instead of buying specific companies is I don't want specific company risk. I think this theme is good for the long term, but I don't want to just pick one and hope it works. I'd rather have an index fund of all of them, so if that a few of them fail, the rest of them will pick up, and I'm never in a situation where I just didn't pick the right horse. First up, let's talk about clean energy. And for this, I use the iShares Clean Energy Index Fund, or ICLN, or iClean. The Global Clean Energy Index Fund focuses on alternate forms of fuel to gasoline or oil-based fuels. In it, you'll have companies that have exposure to wind energy, companies that have exposure to hydrogen, and companies that have exposure to solar power. My next ETF is the Invesco Solar ETF, or TAN, which again, good pun. This one obviously focuses on just solar energy companies. It focuses on the companies that produce the products that make solar energy, but also has a little bit of exposure to the commodities that are involved in solar energy. Now that we've got clean energy taken care of in the form of TAN and iClean, I wanted to find something that would focus on the Green New Deal. And there was no better way to focus on the Green New Deal than coming up with a way that we could play carbon credits. If you're not familiar with carbon credits, it's what companies are going to use to pay off the pollution they produce. If you're a company that produces significantly more pollution, then you're going to be in a situation where you need more carbon credits. For this, I'm not using an exchange-traded fund. I'm using something called an exchange-traded note, or ETN. And the best ETN that I've come up with is GRN. This is the iPath Series B Barclays note that covers carbon credits. By buying ETN, your portfolio will have exposure to carbon credits, something that is almost guaranteed to be a need in the future. Next up, I wanted to focus on the theme of inflation hedging. With all the global central banks printing money and devaluing their currencies, you probably want something in your portfolio that hedges against the potential of serious inflation. In this case, I'm using two different kinds of hedges. First off, I have the Van Eck Goldminers Fund, GDX. Gold has long been used as a way to hedge against inflation. As the value of fiat currency like the US dollar, the Canadian dollar, or the euro goes down, the value of gold increases. So by having exposure to gold in your portfolio, you'll be able to protect against that inflation. I use the Goldminers instead of using the gold ETFs, GLD or IAU, because you get a dividend yield. Also, you don't have exposure to the manipulation that takes place in the paper-based gold market. This last choice is the iShares Silver Miner Fund, or SLVP. The reason why I'm getting both gold and silver is gold takes care of inflation. Silver is a primary component in solar panels, so in addition to being a hedge against inflation, this ETF also serves as a commodity for the use of clean energy. By building a portfolio that has exposure to some or all of these ETFs, you're planning for the future. You're investing for future themes. Personally, I'm only using these as components of an overall portfolio that also includes traditional companies and ETFs. But I did want to have exposure to potential future themes that could have a big impact on my returns as we move through the 25-year time horizon that I have. Learn more by watching my other videos. Please like and subscribe, and I'll see you in the next video.